Hi, I'm Holly and you're watching 𝐊𝐿𝐴𝐚 TV live from Sydney. This is the stocks in action. In today's show, we'll be taking a look at the latest updates from Australia's biggest gas supplier, Santos, cloud-based parental control solutions provider, 𝐵, and real estate investment trust, Dexus. We'll also cover smart and affordable hearing solutions provider, 𝐊𝐴, and Australia's second largest bank, Westpac. And we'll zoom through the results during their respective financial year, dividends distributed, and their latest updates as well. Lastly, join us for a quick glance at the developments across the ASX 200. So stick with us. To kick it off, shares of Australia's biggest gas supplier, Santos, were trading down today after the company shared its half-year results for 2021 and posted record half-year production and sales volumes, coupled with strong free cash flow and underlying earnings, followed by a higher interim dividend as well. According to the release, there's been a record production of 47.3 million barrels of oil equivalent and record sales volumes of 53.8 million. Free cash flow of 572 million and underlying profit of $317 million. Santos, via its ASX announcement, explained that the results reflect higher oil prices compared to the corresponding period due to a recovery in demand, but they were offset by lower average LNG prices due to lagged oil link pricing and long-term LNG offtake in contracts. The leading oil and gas company reported a net profit after tax of $354 million, including net gains on asset sales. This is significantly higher than the corresponding period due to impairments included in the previous half-year result. Plus, the board will be paying an interim dividend of 5.5 US cents per share, fully franked, 162% higher than the previous interim dividend. And next in the news is 𝐵, the cloud-based parental control solutions provider. Shares of the company 𝐳 were trading flat today after the company shared that it has completed the acquisition of UK's leading digital safety solutions provider, Smoothwall. Smoothwall operates in the UK and US and has around $30 million in annual recurring revenues and provides services to over 12,400 schools. It has a complete and complementary portfolio of mature digital safety products, and one such product is the Smoothwall Monitor, which is a global leader in the rapidly expanding cyber safety segment of data analytics and monitoring. As claimed in the ASX release by 𝐵, this acquisition establishes it as a global cyber safety company and now has a significantly increased scale, a global market presence, and a leading portfolio of K-12 online safety products. 𝐵 seeks to capitalize on the synergies from this acquisition to continue its global growth. Now it's time for a short break, but stay with us because I'll be right back with more trading updates for the Australian market.
Hi, I'm 𝐳 and get ready to take the crypto ride with me on 𝐊𝐿𝐴𝐚 TV. Watch the Crypto Buzz every Tuesday and join the excitement at 𝐊𝐿𝐴𝐚 TV. From Bitcoins to NFTs to Dogecoin and DeFi, we have updates about everything around these digital currencies. Understand the investing rationale and the risks involved in the space with me, 𝐳, on Crypto Buzz. Keep watching 𝐊𝐿𝐴𝐚 TV.
Welcome back. I'm Holly, your host, live from 𝐊𝐴𝐚 studio in Sydney, and you're watching the stocks in action. Now to the next news covering Dexus, a real estate investment trust. Its shares were trading down as the company shared its financial year results today. Dexus has achieved a net profit after tax of 1.1 billion Australian dollars, up 17% from the prior year. Adjusted funds from operations and distribution were up as well, 51.8 cents per share, up 3%. And return on contributed equity stood at 8.3% as well. Increased funds under management were achieved from a new office joint venture, securing a merger approval with Dexus Wholesale Property Fund and the proposed acquisition of APN Property Group. It progressed in planning for the city-shaping projects in its $14.6 billion development pipeline. Dexus completed $881 million of developments, increasing the total group industrial portfolio to 2.6 million square metres. And next in the news is 𝐊𝐴, a smart and affordable hearing solutions provider. Its shares were trading up today post the company sharing on the 17th that it'll start a clinical trial to test the safety and effectiveness of 𝐊𝐴's newly developed range of hearing aid products. This will support 𝐊𝐴's planned expansion into clinically tested and regulatory approved medical devices. The company has engaged in National Acoustics Laboratories under the terms of a clinical trial agreement to assist with conducting the trial. And the results will allow 𝐊𝐴 to expand its global hearing solutions by meeting hearing aid compliance requirements initially with the US Food and Drug Administration, the European Union and the Australian Therapeutic Goods Administration. And the last news to be discussed in the session covers Westpac. Shares of the Australian second largest bank, Westpac, were down today after the company said it would think on returning capital to shareholders, even after it's anticipating lower margins for the second half and higher expenses for its fiscal year 2021. The bank did not disclose its cash earnings for the third quarter, and it has reported the Common Equity Tier 1 ratio of 12%, which was a 12.3% in March of 2021. Its risk-weighted assets are up 2% over the third quarter as well, and the bank's funding and liquidity stayed strong. Liquidity coverage ratio is 127% and net stable funding ratio is 123%. Moreover, its deposit to loan ratio stands at 80.2% compared to 79.8% in March of this year. Now to our fun stock fact of the day, which covers, you guessed it, Westpac. Did you know that the name of the bank is actually a portmanteau of Western and Pacific? It's also very old too, over 200 years, so not half bad at all. Now before wrapping up, let's quickly glimpse through developments across equity and commodity markets. Let's first start with the ASX 200 performance. Well, the S&P ASX 200 is lower today, dropping 0.76%. Breville Group is down 8.10%, while Magellan Financial Group is down 6.22% as well. 7 of 11 sectors are also lower, along with the S&P ASX 200 index. Financials is today's worst performing sector, while consumer staples is the best performer. Alright, that is just about all for now, but stay tuned with 𝐊𝐶 TV for more live market updates. We'll be back with more news on markets, economies and diverse themes and sectors. Holly Shields signing off.